So I'd like to go through short exercise number 11 with you. If you turn to page 215, the following balances appear on the books for Sarah Simmons Enterprises. Simmons Capital had 29,600, and so I'm putting the adjusted balance. And here's where you'll put the debit amounts, the credit amounts, and then you'll give a description out here. And that's why I kind of want to go over this problem so you can kind of see how this T account actually works. So all of these adjusted balances are in your book, and so I opened up all of the T accounts, and that's requirement number 1, and that's as of December 31st. So the main thing that we want to do is post the closing entries to the accounts, denoting posting amounts as CLOS, kind of like the adjusted balance. So what I'm going to do, one second. So the first thing we want to do, because there's 4 steps, is close the revenue into income summary. Okay, so that's the first thing. Close the revenue into income summary, and there's only one. So we'll just put, since it's on the credit side, to close it, CLOS, this is our closing entry, will be 24,500. Okay, and now and we'll just put the balance way down here. The balance now equals this minus this. So we have a balance of 0 on the credit side. So if we debit the revenue, we have to credit the income summary for 24,500, and this was closing entry. Okay. The second step is to close our expense accounts. So what we're going to do, and I'll just do that over here, let's close our salaries expense. We're going to close our rent expense, and then we're going to close our advertising expense. And if I click here, hold down my control button and click all 3 of those, and you guys can't see it, but down here it does tell me that equals 11,700. So if I credit these and they total 11,700, I have to debit income summary. Okay, so maybe I should write this. First step is close revenue accounts into income summary. And then our second step was to close expense accounts into income summary. Our third step, and this is kind of confusing, is to close income summary into the capital. Don't close the capital. We want to close our income summary. So to zero this out, a couple ways you can do this. You can put your cursor under the smaller of the 2 and figure out what the difference would be to close it. And then these 2 would equal, these 2 equals this, and that would be your closing entry. Okay. The other way that we could do that is figure out our balance right now is is this minus this. Our balance right now is 12,800. So to get rid of that balance, okay, we're going to have to debit income summary, and this would be a close. Just so you know that I didn't put, this is just a balance, okay? So if I debit the income summary, I have to credit the capital for 12,800, and that was a closing entry. And the fourth step is to close withdrawals into the capital. So this was 10,500. That's a debit. To close it, we credit that. If we credit the withdrawals, we have to debit the capital. And that would be your 4 closing entries. The last thing it says is, what is our ending balance? Well, these two, and hopefully we still have a credit, which we do because we've got like 41,000, 42,000 over here minus this. So equals our beginning balance, our adjusted balance, plus this closing entry, which was net income, minus when we put the drawing account in there, and our ending balance is 31,900.